Hi there, welcome to Kneppy Invest. On May 27, 2024, I released my top 20 holdings, and I realized yesterday, on November 27, was the 6-month anniversary of this particular video. And I thought, why not check to see how my top 20 holdings has changed over the last 6 months? So that's exactly what I have done. Now, I'm going to do this video a little bit different than this particular video. So I have not prepared at all any slides or anything like that. In fact, I have to get out of this particular video. I don't want to see myself talking there. So what I'm going to do is I've just written down my top 20 companies, and I'm going to go through this in order from 20 to 1. I'm going to briefly not talk about each company, but just say whether I am holding this company for the long term, so a quality company, long-term holding, or if I'm trading it. And then I'll also go through which companies are new in the top 20 and which companies are out. So let's get stuck into it. Looking at number 20, which is Breville Group. In fact, I'm going to look at the weekly chart, and so you can see where I bought these companies. Now, I bought Breville Group. I've always liked Breville Group, and we saw the share price of Breville Group dip significantly back in the middle of 2022. And I bought some shares at $19.50 on a nice little bounce off a nice little trend line. And I thought this was a pretty good valuation for the company. I like the future of Breville Group, and this is a long-term hold. So coming in number 20, we have Breville Group, and it was not, I don't think it was in my top 20 on May 24. Now, I'll talk about why we have some new companies and why some companies are no longer in the list, because that's fairly important as well. Okay, coming in number 2, we have, and there's going to be most of the companies in this list are in my super, which means most of these companies are long-term holds, quality companies. That includes Apple. Now, I started investing in American companies back in 2022 when we saw a fairly big dip in the market. I think my first purchase was PayPal, and then I bought quite a few of these companies listed on the NASDAQ and New York Stock Exchange back in 2022 into 2023. I haven't bought many since then. Apple was one of those companies. In fact, the share price has gone up 50% since then. This was is also a long-term hold. No, I have no intentions of selling Apple at this point in time. So coming in number 19 with Apple. Coming in at 18, Alphabet. And this was definitely opportunistic purchase. I saw the share price drop a fair bit. In fact, it fell from $150 down to 98, so below 100. And I still remember I was saying to myself, if the share price of this company drops below 100, I'll buy some shares. And I did buy some shares at $98.91. Share price hasn't quite doubled, but it's moving in the right direction. So this was, I didn't quite time the bottom to perfection, but you don't have to do that. I saw some value in this company back then. And I even think the P ratio of Alphabet might be even lower than CBA. So if I had a choice between Alphabet and CBA, there's no choice because it's Alphabet 100% of the time. So another long-term quality hold. So I hope, and I think I will hold this company for a long time. Now, coming in at number 17 is Aristocrat. This was an opportunistic purchase. I didn't really have much intention of owning Aristocrat Leisure again. I've held this company in the past. Now, one of my faults in the past have been holding high quality companies and then selling when the share price has increased a fair bit. And that did happen with my holding in Aristocrat quite a few years ago. I've done this time and time again. And I've come to a realization that these high quality companies, and I would put Aristocrat in that basket, holding these high quality companies for the long term is probably the way to go. And I will talk about one company I sold out completely of that puts that particular line of thought to shame. Anyway, so I bought some Aristocrat Leisure shares back in 2022 at $35.97. And one of the reasons I bought some shares in this company, I thought it was cheap. The P ratio, I think, was like 15 to 17. I thought that was ridiculous for a company that is growing. And the share price, not quite doubled, but it's getting close. And I would say right now, P ratio 33 it's getting, a little bit more expensive. Always thought there was a bit of a discount to this company because of ESG concerns, but obviously those concerns have gone out the window with Aristocrat Leisure. Okay, so that's Aristocrat coming in number 17. Coming in number 16. Oh, by the way, so those first four companies are long-term holds. Companies I want to hold for as long as possible. Aristocrat, I have been umming and ahhing about that one. Maybe I should take profits, but I'm willing to hold that for as long as possible. Now we get to a company that I am trading, XRF Scientific. I do think this has the potential of becoming a high-quality company in the future. But this company is cyclical, and when there is cyclicality in a company, I think most companies are cyclical, but this is definitely a more cyclical company and is definitely on the lower spectrum when it comes to quality than those first four companies in my list. But I bought some shares of XRF Scientific back in early 2023 at $1.05, and I'd been following this company for a long time. In fact, I've been following this company since about 2018 when the share price was like 12 cents. And finally, I took a position. I thought, I just have to take a position. Share price actually about 6 months later actually fell below my buy-in price, but a beautiful looking chart for XRF Scientific. And this is one that I will take profits if I see the chart turning a negative. But share price is at an all-time high, so no reason to think about selling this company at all. And I think I did participate in a capital raising. I think I did. Anyway, so it's XRF Scientific coming in number 16. Coming in number 15, we have a company that I knew nothing about when I took a position in this company, Telix Pharmaceuticals. Bought some shares back in middle of 2022 at $6.66, an unfortunate number. And the only reason I bought some shares in this company is because the company released an Appendix 4C, and there was massive growth in receipts. And I went, geez, that's massive growth in receipts. I need to buy some shares in this company. So I did exactly that. Before that, I knew nothing about Telix Pharmaceuticals because this was a story stock. And then they started selling their Illuccix, and the growth in the revenue for this company has been out of the world. So share price of this company has increased almost fourfold since then. So obviously, I took a smaller position in this company because I was a little bit more uncertain than, say, Apple, Breville, Alphabet, even Aristocrat. And that's why this is not higher, because a smaller position. But another beautiful chart for this company. Is this a long-term hold? This sort of is in between. I'm not sure if I could define Telix as a high-quality company just yet. Definitely has the potential. Okay, so that's Telix coming 15. Now onto another high-quality company without doubt, one of the biggest companies in the world, Microsoft. This is another one where I said to myself, when I started investing in American companies, this is one of the companies you want to buy. And the share price was in a downtrend. I was just being patient. I saw a little bit of a breakout back in February 2023, and I bought on that breakout, and that was a good breakout. So share price not quite doubled, but again, just like Telix, or not like Telix, the complete opposite Telix. You see, Telix has gone up fourfold, smaller position. I'm more confident in Microsoft, hasn't gone up as much. Still a pretty nice return over the past few years, but this is a bigger portion of my portfolio because I took a bigger position in Microsoft. It's a high quality company. That's the reason why. So Microsoft's coming in at number 14. Coming at 13 is Rea Group. Went the wrong way there. Okay, this would be my longest hold ever of all companies I've ever held, but I have not held it throughout. So I originally bought shares in Rea Group probably 2010, and I held it until 2021. And I did a video on Rea Group. Let's have a look if I can just find that video. Rea Group, why I sold Rea Group, February 2021. So that is when the share price was around about $160. So I sold at $160, really nice profit. And then the share price kept on going up. Then the share price dipped in 2022. Then the share price started to turn upwards again, and I re-entered at $140. So at a lower price than I sold out of. And that was a good decision. So share price has gone from 140 up to 251. And this is probably, and the reason I sold, I just thought the valuation was too high. And that was fortuitous that the share price actually did drop in 2022 because of rising interest rates. Will I sell Rea Group if I think it's expensive? No. Another high quality company. And I do like their expansion into India. So I think that has a lot of promise moving forward. So it's Rea Group coming in at number 13. Coming in at number 12, we have a company that I have traded off and on over the past 15 years, CSL. My most recent position was at $292. And my very first position in this company would have been probably at about $30. And I have not held CSL since then, traded off and on. And again, why? That's what I've been asking myself. Why? Why not just hold this forever? Now, the share price of CSL has been going sideways the last few years. When I say last few years, I'm talking about 4 years. So that means share price consolidating, company's still growing, which means the company's going through some margin contraction. And eventually, when the P ratio gets low enough, I think there'll be a lot of interest in CSL, and that's when the share price will take off. So P ratio of this company is 33.72. Pretty sure back 4 years ago, P ratio would have been 50 to 60. But this company's growing. This reminds me of Microsoft, although hopefully not as long as what happened with Microsoft. But Microsoft share price went sideways for about 15 years, even though the company was growing. And the reason the share price went sideways for 15 years is because the company went through a period of multiple contraction. The market was less and less willing to pay premium for that company. And you can see look at the chart, look at the long-term chart from Microsoft from about 2000 through to 2014, share price did nothing. Hopefully that's not happened for CSL. Hopefully share price breaks out. But I do know people trade this because the share price is trading in a range. And so you do see the share price under pressure when it gets to about $320. So between $300 and $320. And you do see a bit of support when the share price gets to $260 or below. Okay, so it's CSL coming in number 12. And by the way, I should mention, so I hold a longer term position in this company, and I'm also trading it as well. So right now, half of my position in this company is a trading position. Okay, now on to another high quality company, Amazon. And you can see a theme when it comes to my United States companies. I think these companies are the future. These companies will continue to grow, and I think there will be pressure to break them up eventually. And I think some of those, what do you call them when they break companies up? Some of those mergers would not be good investments, but some would. For instance, Amazon, if they break up Amazon Web Services, that's where you should be headed. Anyway, so this was always a want for me. And then the share price dipped again back in 2022. Again, not timing the bottom at all, but I bought at $115 and now the share price is $205. So no complaints from me. When it comes to Amazon, again, another high quality company, another long-term purchase, another long-term holding, I should say. Okay, so that's coming in number 11. Okay, let's get to the top 10. And coming in at 10 is a little bit of a surprise. Aussie Broadband. And there's a reason why Aussie Broadband is in my top 10. And the reason is because I'm trading it. So I took a longer term position back in 2023 at 352. And then I saw an opportunity when the market completely overreacted to a profit downgrade, which was not a profit downgrade, even though all the experts said it was a profit downgrade. It was not a profit downgrade. And the market overreacted. I saw an opportunity. So I bought some shares at $2.98 back in July. And that's been a nice little return, I suppose, since then. It's gone up 77 cents. So it's on about 25% return in a fairly short period of time. So that is my trading position. And when I sell out that trading position, Aussie Broadband will not be in the top 20 because I don't think it quite belongs in terms of quality with these other quality companies in the top 20. So this is one of those trading companies, or one of those companies that will be in and out of my top 20, depending whether or not I'm trading it. Now, coming in number 9 was a strategic position I took. Goodman Group, not that long ago, about a year ago, almost a year ago. And the whole reason I bought shares in this company was because of they announced just before I took a position that they were moving into data centers. And I went, yep, I'm going to take a position in this company. And that's what I did. So I had been a holder of this company in the past. And this is another company that I had been trading. And I went, I'm going to just take a position in this company for the longer term. And that's what I did in November last year, $20.89. And it's almost doubled since then. I've thought about taking profits, but I'm not there yet. So this is, even though it's more of a longer term hold, maybe I could imagine myself taking profits in this particular company. So that's Goodman Group coming in number 9. Now, another company that's probably high quality, but this is another one that I am sort of half trading, and that's ResMed. This is another opportunistic purchase. I have never held ResMed before this. This was just me, and this was not only me, a lot of other people realized the market was really overreacting back in September last year because of Ozempic. People thought, some people thought, maybe not everyone, some people thought, Ozempic's going to destroy ResMed. A complete overreaction. This happens a lot with the market. And a lot of times what the market does is they're so risk averse that if they see the smallest possibility of a threat, they will sell and then ask questions later. And that provides opportunities for all of us to buy these companies at much better valuations. So I bought some shares in this company at $23.87, and I bought a fair few. And I went, okay, what I'm going to do is I'm going to hold half of that and then trade the other half. I have not, at this point, sold out of that trading position. I've just held firm because there's no reason to. Share price keeps on increasing. So share price has increased from $23 up to $38.57. Yeah, no reason. The chart looks pretty good for ResMed. So that's coming in number 8. But again, when I do sell my trading position in this company, it probably will fall out of my top 10. Definitely will fall out of my top 10. And now onto a company that is definitely not high quality, but this is just getting in and probably have to look at the daily chart for this one. Yeah. This is also getting into the data center thematic, the electrification, the AI thematic, that sort of thing, which I have done quite a bit in the past year. SKS Technologies. I first had a look at this company many years ago. In fact, this is the only company whose CEO has got in contact with me. What's his name again? Oh, God. That's terrible. I can't remember his name. Matthew J. CEO SKS, Matthew Jinks. Yep, I got there in the end. Looks fairly young, by the way. Anyway, so he's the only CEO that has gone in contact with me, which is, funny enough, that makes me like the company even more. I don't know why. Anyway, so I first did a video on this company many years ago. 2021. One for the watch list, I said. June quarter, so August 4, 2021. If you go back to August 4, 2021, nothing. There was nothing happening here. Share price wasn't doing nothing, not much volume. What they were doing really wasn't that exciting. And then the company announced, I think it was late last year, that they were moving into the data center area, and that was a real growth potential for them. I completely missed it. The market didn't, because that's when the share price started to break out and go up. And then eventually I took a position in this company in June. I was waiting for a significant pullback. I really didn't see it. And I bought some shares at $1. I just had to. I just thought, I'm going to buy some shares. I just had to. And I have added to my position along the way. So that's why this is a pretty big holding coming in. Was it coming in number 7? I've added to my position along the way. This is one of those companies where I have added. That has not happened all that often, and I should do that more. Add to winning positions. So I've done that with SKS Technologies. Share price has almost doubled since my initial position at $1. That was only in June, late June, early July, but I've added to my position. That's why it's pretty big. Again, this is more of a trading position than a long-term position. But if the company keeps on hitting their performance out of the park, who knows? Blue sky is the limit for SKS Technologies. What's the market cap now? $224 million. Now, coming in at number 6, we have Taiwan Semiconductor Manufacturing Company. Have to look at the weekly chart for this one. This was definitely, well, actually, I bought shares in this company for 2 reasons. The main reason was valuation. I had a look at quite a few of the companies I wanted to own, and I saw that TSMC had a PE ratio of 14, 15. I went, why? And I just had to buy shares in this company. This was back in early 2023. And then all of a sudden, the share price has popped up. So it's almost doubled. So I didn't take quite as, or maybe I did. was going to say, we didn't take a bigger position in this as I did in some of those other NASDAQ companies like Alphabet, Apple, but I think I might have. And the reason why is because I think that company was, or this company was quite good value back then. The chart didn't look all that good when I took a position, but it looks much better now. Anyway, so that's Taiwan Semiconductor Manufacturing Company. I do think this is a high quality company, and I have no intentions of selling any shares in this company at all, unlike the next company, which is Visan. Okay, so I bought some shares in Visan. This is just a trading position. And I nearly sold recently. So yeah, bought some shares at 16 cents. When was that? July 2023. So not that long ago. So we're talking about just over a year ago. Nearly sold because of what happened on the 25th November, no, the 22nd of November. AGM trading update, significant overreaction for the market. The share price has bounced pretty nice since then. So I wanted to see if the share price would remain below 42 cents. It's now 45 cents. It's actually gone back above that level. And this is one of the reasons why I don't have automatic stop losses. I want to sort of use my own judgment, but I still want to follow my processes. And if the share price remained below 42 cents, I probably would have taken profits. But I do like the share price has bounced, which shows me there's a bit of strength. And we saw that strength on that particular day. A lot of buying came in when the share price fell to a low of 28 cents. So the share price has more, not doubled, but it's increased by about 60% since then. Anyway, so this is more of a trading position, not a long-term position, definitely not a high-quality company. Maybe one day it will be perceived as that, but it's a small company, 212 market cap, but definitely for now, maintaining a position. For now, but sketchy. Okay. The next company, if I prepared this video one day later, I have a feeling this company would have been higher on the list, and that is Pro Medicus, coming in number 4, Pro Medicus. And the reason why, look at the chart. Look what happened today. Share price up 9% on a $330 million 10-year contract with Trinity Health. This company keeps on getting more and more expensive, which is understandable. This is now a 5-bagger for me, I think. Bought some shares at 55, it's close to a 5-bagger. When I bought some shares back in 2022, I thought, this company is expensive, but I want to have a position in this company. And the reason why this is not in the top 3 simply because my initial position was not that big. And I went, look, I'll take an initial position, but if the share price falters, I'll add to that position because the share price had just entered an uptrend. You can see the share price was in this short-term downtrend just before that. Went to a low of $38. And I just wish I had the foresight to buy then because I've been wanting to buy shares of this company for a long time. And the best time was during COVID-19. Share price fell to $14, $15. Anyway, so never too late. Don't say to yourself, well, I'm too late, because look at this chart for Pro Medicus, company coming in number 4 and not that far off from number 3. Number 3 is an interesting one. So Pro Medicus is a high quality company. That's without doubt. There's no question. My only concerns about Pro Medicus is the valuation. I've been umming and ahhing about not selling the whole position, but just taking profits. I've yet to do it, and I'm still thinking of doing it, but the company keeps on, impressing. That's probably the appropriate word, impressing. And so why sell if the company keeps on impressing? Okay, coming in at number 3, we have Shopify. All right, this is a company that I don't think is high quality, but it has a lot of potential. And I think it has the potential to be a really high quality company in the future, maybe 5 or 10 years down the line. And I saw an opportunity. Now, the market cap of this company is 145 billion right now. So if you have a look at the weekly chart for Shopify, I just saw a massive drop in the share price. And I thought to myself, oh, this is the company I want to buy for the longer term. And I saw an opportunity, bought some shares at $37.63, and the share price has tripled since then. Now, the other thing I should mention is the company has released a really good trading update or quarter results not that long ago, maybe 2 weeks ago, and the share price has taken off. And that's why this company is coming in number 3, because the share price has increased significantly since I bought. Am I thinking of taking profits? No. So no, so that would probably signify that this is more of a high quality, more of a conviction holding, longer term holding, not a trading stock. Yeah, maybe. Okay, the last two probably fit in trading stocks. And company coming in number two, I have taken profits. It still comes in at number two, and that company is Findi. Now, originally bought Findi shares long time ago when they were known as something else. They've changed the name 3 times since I originally bought shares in this company. I can't even remember why I bought shares in Findi. And they went through this cybersecurity phase. They were known as Visan, I think, if I remember. Was it Visan? Findi, Visan. For some reason, that just rings a bell. Visan. Visan. Uh, oh, no, not Visan. That's, what was it called? Ah, yeah, Visan was just of course it's not Visan because I can easily find out what the company was named if I go to Market Index. Sometimes in Market Index they'll have the previous name here in the About section. They don't, but all you have to do is just go to the announcements and then just go back a couple of years, maybe. I'm trying to remember when they changed their name. It was maybe 2 years ago. It's no, maybe just a bit more than Vortiv. That's it. Vortiv. Then they changed the name, did a consolidation, that sort of thing. Anyway, and this is the only company that I've had options in. I exercised those options in January last year at 90 cents. It was probably the best decision I've ever made when it comes to, I had to exercise, and the share price was higher at the time, but I waited to the last minute, and so I did this through Net Wealth, and Net Wealth told me I left it too late. I should have done a little bit earlier, like a week in advance, but I exercised the options before they expired. Didn't see the problem anyway. So I still hold those options, or not those options, but those shares when I exercise those options at 90 cents. Share price has gone from 90 cents to $7.75 in less than a year. That's why this is my second biggest holding, because I've taken profits once. And if I didn't take profits, this will be twice. I'll put it this way. This will be twice my second biggest holding. I just had to take profits because the holding in this particular company, which is not high quality, not the sort of company I might want to own for the long term, it was just getting too big and I wasn't feeling comfortable with that. Right now, I'm okay holding this amount of shares in this company because the share price looks good, but I'm definitely trading this. So if I see or start to see weakness in the chart, I will take profits. Maybe not sell out completely, but definitely take profits. Okay, so coming in number one, we have a company that, in fact, one of my longest holdings now, Gentrack. And they released something really good the other day, and that's why it's now my biggest holding over Findi. So Gentrack, I bought this back in 2020 and $1.41. Share price now $12.40. I don't know if I've taken profits with this. Breakout happened in December 2022. We're talking about 2 years ago. Breakout happened about $2. So share price has increased sixfold since then over a 2-year period. It's a beautiful looking chart. The company had released their results, not the AGM, released their results, and the market liked it. And the chart was starting to look a little bit weak. And if the share price actually did fall below 850, I would have taken profits. So I'm glad it didn't, because the share price has now gone 50% higher than 850. Anyway, so Gentrack is now my biggest holding, and I'm trading this. I'm waiting for a signal to sell, and I have not received a signal since 2022 when a share price broke out. Got very close like a month ago, but no signal just yet. Okay, so that is my top 20 holdings. So a few trading companies in there. In fact, among the high quality companies, Pro Medicus is at number one. Sorry, Shopify. I'm not sure if I could classify you as high quality. Some of the other companies that got close, but not quite there. Nvidia, yep, zero. So Nvidia and zero are two long-term holds. Fiducian, which is another long-term hold. Meta Platforms and Tesla. So those are longer term holds. Some of the other companies that did not quite make it that might be more trading companies include Catapult. What else is there? Life 360. So that's actually number 21. And Life 360's chart just looks awesome. Stealth Group is also just missed out. And Catapult. Genus Plus. That's another one. Okay. Now, the next thing I just want to discuss is which companies are new. So Findi 6 months ago was not in my top 20. I've not taken any profit since then. And the only reason it's gone from being outside the top 20 to number two is because the share price has increased significantly. Shopify, same thing with Shopify. So number two and number three are two companies that are new, but the share price have increased significantly. Pro Medicus was not in my top 20. So 2, 3, 4, significant increase in share price. And that's why those companies are at number 2, 3, 4. SKS Technologies, CSL, but that's because I actually did add to my position. Same with Aussie Broadband and Aristocrat. Share price has increased. Companies out, Novo Nordisk, which share price has gone down. Johns Lyng Group, share price has gone down. Neuron Pharmaceuticals, share price has gone down. RPM Global, share price actually gone up, but share price has not gone up as much as some of the other companies. That's why it's just missed out. Nvidia was in my top 20, and IPD Group, I took profits with that, and it would have been in my top 5 if I didn't take profits, and it's just outside my top 20. And last of all, JB Hi-Fi. In fact, if I did not sell completely out of JB Hi-Fi, it would have come in at number 4. It would have been higher than Pro Medicus. And the only reason I sold out of JB Hi-Fi, second time I've done this in the past 15 years, is because I thought it was too expensive. And that could be a mistake. Could be a mistake. And I wouldn't say I'm kicking myself, but yeah, why? That's what I'm asking myself. Why did I sell out of my position in JB Hi-Fi? And I've done this before. Oh, it looks expensive. I'll just take profits. It worked with the Rea Group because I bought back in a lower price. So maybe if JB Hi-Fi does fall, maybe we will go into a significant recession. And maybe we don't want that, but maybe that's the future for JB Hi-Fi. Okay, so that's all I have for this particular video. Now I've got to record the ASX daily rundown video right now. So anyway, so if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.